Good evening, everyone, and welcome back. I hope everyone had an awesome weekend, but it is time to get ready to go back to work. Monday is straight ahead. Let's go ahead. We have the holidays coming up. We have Thanksgiving this Thursday, so this may be a slow week, but nonetheless, it may still provide some decent opportunity for us to profit and make some little bit of money before going into the weekend. Now, so looking at the week ahead, guys, I just wanted to start covering some of this stuff that's been going on lately. And now, if you guys have been looking at the news, it's been all over the news. You have the likes of Ray Dalio. He's currently denying that he is doing this, but obviously the news articles or whoever got the source or whoever actually posted this got this information from somewhere, which is obviously public information. It's all over the place, guys. All you have to do is start looking through the platforms and start seeing these orders, these massive orders going in. If you go, for example, on your options chains for the different stocks, ETFs, and indexes, you'll be able to see where people are actually putting money, where smart money, as they call them, big money, big players like to put their money to work. And you'll be able to see that just by going through the options chain and kind of reviewing what's actually going on there. So Ray Dalio obviously would not want to share that information and would not want to be responsible for influencing people to do something and then costing them money or anything like that. So obviously he is going to deny, as I would, because I don't want to be responsible for millions of people either losing money or one way or the other. You know what I mean? Because then that obviously put some strain on your perspective, because if you're seen as an expert and you're over here publicly admitting that you're putting billions of dollars that the market is going to crash, and then the market crashes tomorrow because you said that you put $1 billion bet that the market is going to crash pretty soon, then obviously that may have an impact. So he doesn't want to be liable for any crazy actions. But obviously, as you guys can see here, the markets are not crashing and they're not doing any such thing. After they broke out of their levels out here, let's go ahead and take a look at this here. All right, so the markets broke out of this range that they were trading in, right? So we were stuck in this little range here, this tight range. And then the market decided to say, hey, you know what? We're breaking out higher. But as I shown in a previous video, you got the markets going higher, but stocks like Amazon, we got stocks like Amazon, you got stocks like Nvidia, Netflix, everything pretty much for the majority of the stocks that I have, for example, on my watch list. And I know, guys, my watch list is not the entire market. I have a very small sample size, so I didn't actually go through the entire market to see. But where a lot of big money likes to play, those stocks are not moving higher. If anything, they keep moving lower, or they keep going sideways with a pretty much slow trickle lower. As you've seen, for example, Amazon. It's like, hey man, Amazon is considered to be one of the prime stocks out there, but it's not moving higher. Google is not moving higher. A lot of these stocks are just not really moving higher, or are even near their all-time highs, like the markets are right here, right? So the markets are up at their all-time highs right now after breaking out of this range here, right? But now, the markets themselves, like the stocks themselves that these markets comprise of, are just not really doing the same. And it's a little strange to me, right? And obviously we have a lot of news out there that the Fed, keeps dumping money into the markets, dumping billions and billions and billions of dollars overnight into the repo market, et cetera, which is artificially propping up the markets, right? So obviously I don't know, I don't have that inside information. The articles and the information that is publicly available seems pretty convincing that is the reason why the markets are being propped up, guys, But again, that's not the area that I like to focus on, because at the end of the day, I don't know what the market is actually going to end up doing. It could actually keep going higher. It could actually just break down and come down so fast that we won't even know what hit us, right? But that's the area that I rather focus on. Whatever the market rather wants to do, I want to go along with it, because I don't want to be left behind, right? So I'd rather get in here so that I can take a nice joyride down like this. I want to get in here so that I can take this nice joyride up like here, right? Now that's what I want to focus on. That's what I want to look at. So when looking at the markets, right, in the week ahead, all I see here, guys, is the markets hit this all-time high once again. Now we have a new all-time high and slowly been trickling lower, right? Friday, we got this little chop, and the markets pretty much moved a little bit higher, but overall still lower compared to the all-time high. Now, going into this week, because it is a holiday week, can we expect the markets actually to do much? maybe not. It's probably going to be a slow week going into that. It is a short week because of the holiday. We have Thanksgiving. The market's probably not going to do much this week, but we may get a little bit of action in individual stocks, especially the ones that we have reporting earnings. I have two favorites that I like that I will share by the end of this video that may show some potential profits for you this week. Okay, so don't miss out on those. I'll share those towards the end of the video. Now, but looking at the markets here, guys, again, the markets they even feel like they are artificially being held up. It's just one, for the reason I already mentioned. It's like, hey, man, you go to stocks like Amazon. Let's go ahead and take a look at Amazon. Look at this. Amazon is nowhere near its all-time highs, right? Nowhere near. So why is it that a stock like Amazon, where it's like the prime of the crop, you know what I mean? This is the creme of the crop right here. You know what I mean? Look at this thing. It's like this thing went all-time high, and now it's just hanging out here. Like, what is going on with Amazon? That Amazon is failing to keep going higher. Why didn't Amazon, after having earnings, why is it that instead of gapping lower, why didn't it gap up and then had that run up, now continuing it back to push it higher like the markets are doing? No, instead it gapped lower, and pretty much, it rallied, had an awesome day. This was an awesome trading day for whoever was trading Amazon this day, right? We were looking at it on the channel all day that day, and this was an awesome Friday, guys. So if you missed it, definitely go ahead and click the links below. Make sure you sign up for the Discord group. Don't miss out on trades like this. And this is exactly what I'm talking about. I don't want to be that guy that's missing out on something like this because I'm overly bearish or overly bullish. I'm expecting Amazon to gap down tomorrow and then continue lower, and then this is actually what it ends up doing, right? So it's just those things, guys. So we want to focus on executing properly so that we are able to take advantage, whether the market wants to rally or the market wants to crash. I don't really care, and you shouldn't really care either. Whichever direction it wants to go, let's just go with it. You know what I mean? So as I look at this just tells me, hey, man, the markets don't really want to come higher. I don't know why they're coming higher. And again, some of those reasons could be, again, the artificial prop up by, the plunge protection team over here, the Fed, the administration, etc. So looking at the NASDAQ futures here, you see the same thing. Once it broke out of these levels, it went higher. Right? Went higher, now slowly trickling lower. You got this nice little potential reversal pattern building here for a potential drop. Now, if the market is due for a crash soon, guys, anywhere between now and let's say March 27th, which is a date we believe, or I've seen out there being pointed out as the D-Day, where the market will come down, you know what I mean? That day or below is like, or before. It's like March 27, 2020 could be the day where the markets ultimately crumble, right? So looking at this, you can see that the markets, again, broke out. And, these are expected pullbacks, guys. The markets are due for pullbacks. It's just normal process. Nothing goes up in a straight line. Nothing goes down in a straight line. They are due for these certain pullbacks before continuing higher and or lower. So as we look at everything here, so all the futures on the market futures. So let's take a look at the Dow futures here. Same situation. The Dow futures did take a little bit longer to actually break out, which was of concern to me. But, the next day, those concerns were reassured and taken care of, because the Dow did manage to go higher like the other markets did. And obviously is doing this. And now, again, same pullback. This is, I would say this is a normal expected pullback before continuing higher. But we don't know. We're going to have to see what comes next, what comes this week, because, we may be in for a big surprise. Who knows? Looking at the VIX, guys, the VIX, again, is still hanging out at the floor. Look at it. I mean, it's still here, guys. It's ready to pounce. At any time, it's ready to bounce out of these levels. Now we have over 18 days now on this zone. And I call this level here. Let's go ahead and take a look at it. Look at this. Now, we've been here for quite some time, longer than the last time we were here. So now, when it does come out of here, guys, it's going to come out fast and furious, and it's going to give us a massive run just like this, okay? So expect that when it comes out, it's going to come up over 20. It's going to come up over 25 without any hesitation. So the last time it did hit 24, almost 25. It didn't quite make it over 25. But this time around, I would say it's definitely going to get to 25, if not higher, fairly quickly. So just be ready for that. and just make sure you're giving yourself the time that it requires. So go out as far as possible because it is on the floor, guys. So there's no reason. So, I mean, that's what I'm doing. I'm not trying to tell you what to do or what to trade, but taking a look at this, guys, you go out as far as possible and just take a look. These things are pretty cheap, right? So what I'm doing is I'm building my positions out here, all the way out here, because these are, the difference between the Aprils and the Mays now, literally 10 to 20 cents, right? So why not go out as far as possible? Because when this thing does break out, you're going to have so much time value added to your positions that it's just going to be so much more worth it instead of trying to guess when it's going to happen. But if you do look at the December 18 contracts here, you'll see that there's a tremendous amount of volume and open interest that went into these. And actually, I saw a lot of these going in when I live, so you could see that people were putting in a lot of money into these strikes. And then when you compare the put side, for example, guys, you can actually see that on the put side, they match up a lot. So when you see these 25, 26, that gives me an indication that these were likely spreads. And you'll be able to see those if you go over to your option time and sales. You'll be able to see, that a lot of those were actually spreads that were put in. And you'll be able to tell because they were put in at the same time. So when you go in there and you look at these, you'll be able to say, oh, okay, so it looks like somebody actually put in a spread because they went in at the same time. It likely indicates that, hey, this is probably a spread order. And when you see singles like this, let's say you see a single, let's say you go through the chart and you confirm that this was not a spread, you got to kind of analyze the situation, guys, and kind of look through it. For example, if you see these 22,000 and you don't see another comparable strike to match this one up, you kind of have to analyze the situation and kind of see, what direction does this make more sense to play. So, would you be buying puts here and put 22,000 contracts at 39 cents, right? So $39 per contract times 22. So 1,000, so 39 times 22,000, guys. That's an $858,000 bet. And I'm willing to bet that if this is not a spread, this is actually a naked put order where somebody actually collected $858,000, right? Because how much lower could the VIX go? Yes, it could potentially break lower and go down to 8. But can you really expect that to happen between now and December? I would probably tell you no. Can you expect this thing to actually expire worthless? I would say more than likely at 13. You're risking a lot of money to be this close, right? So I would say it's a more probable situation that this thing will break out of here and those contracts will expire worthless from now till December. So you kind of have to go through that situation. And I'm not saying that that was the trade, guys. That's my personal analysis on how I go about to determine who put in an $858,000 bet, $900,000 bet, and which direction does this make more sense that is going in? So that's how I go about it personally. It works for me. Go ahead and develop your own system to kind of develop what actually works best for you. So now, as we continue looking at the week ahead, guys, it's looking pretty interesting. Again, I'm expecting a thinner volume than normal because of the holidays, but we should have some decent activity. The markets are due for a pullback. I mean, markets have been being propped up for so long now, for years and years and years, that when this sell-off does happen, guys, it's likely going to be more catastrophic than it's been in the past. So now, looking at this week ahead, guys, let's just go ahead and take a look at some of the favorites for this week. For Tuesday, I'm going to be looking at Cracker Barrel and Burlington. Both of them are going to be announcing earnings, and this is what I like about the two of these, right? So when looking at Cracker Barrel, guys, one of the things I'm noticing is where it is now, right? So I'm looking at Cracker Barrel, and Cracker Barrel likes to report, for example, I believe it's post-market. So let's take a look here. Before market. So it reports before market. So here we go. So before market, this is what it did the last time, right? So you had a massive rally, right? Now, what can we expect it to do this time, right? So now, the one thing that catches my eye as soon as I'm looking at this daily chart, guys, is that it's basically at a floor. It's at a level that it likes to bounce off of. This is a key support area here. Around 154.9 is the first level. Around 153.99 or 154, followed by 152.72 at the lower end as you extend to the left here, guys, right? So when I look at this, I'm like, okay, This thing likes to kind of bounce off of these levels here. And as you can see here, all the way back to April, you can see that it hit these levels and then it bounced higher, right? It came down close to the levels and then it bounced higher, came back down to the levels, bounced higher, back down to the levels, bounced higher, and now we're back to these levels. So come Monday, tomorrow, if this thing does not actually break down below it, I would expect this thing to be a really good point to start buying calls or even shares or even doing some put verticals down here, because I believe it is likely to actually bounce off of these levels and give us an opportunity to profit from that move. Now, a lot of the time, guys, I would not really recommend that you buy or get into a position before earnings. It's always best to wait after the earnings are announced, so that way if it gaps up or down, you can just take advantage of the actual move. Now tomorrow, Monday, it'll probably end up being a little bit more choppy than anything, I would say. So come Monday or Tuesday, when it does report, this thing could gap up, it could open flat, and then again, if it's still in this level here, right? So we get a nice little choppy day tomorrow, Tuesday, when it opens pretty much a little bit there, maybe a little bit, gaps up a little bit. It'll probably rally from that point there back up to these highs, maybe 166 at most. On average, Cracker Barrel only moves, let's take a look. Cracker Barrel only moves about $2.64. So I would say you can expect 2 to 3 times that movement. So a $3 move, you can at least expect $6 to $9 from Cracker Barrel come Tuesday. So $6 to $9 move, guys. And if the volume is really strong, it may give us even more of a movement, but I wouldn't bet on it. I would say that Cracker Barrel has a good $6 to $9 move available for potential profits come Tuesday morning after it announces its earnings. Okay, but I do like this level where it is, and then if it does manage to break this level, then it makes it even easier, because if it gaps down, guys, forget it. It should be an easy play to the downside, but it should be apparent as soon as it opens which way it's going to go. If you look at previous earnings and go ahead and use the tools available to you, including the Analyze tab, you'll notice that it actually likes to do some simple moves. It's not too wicky. So here you go, boom, solid move. This one was a wicky one, right? But pretty much initially bumped higher, and it was pretty much a solid move to the upside, and then it just ended up closing lower. Same thing here. You see it pushed higher, gapped lower, pushed higher. So this one gapped lower, pushed higher. Look at this massive block, right? Massive block here to the downside. This one kind of sucked, and this one kind of sucked. But overall, I would say you have plenty of opportunity compared to, what is it, 6 out of 8 of these give you kind of the good indication that this may actually has a higher probability of giving you a solid block move as opposed to a wicky one. The last two in this year kind of sucked, but overall, I would say Cracker Barrel has a really good potential for making us some decent profits come Tuesday, so it'll definitely be on my watch list. Okay, the next one I like, guys, is Burlington. So let's go ahead and take a look at Burl. All right. And let's take a look at this one. So now, taking a look at Burlington, this one is, let's take a look here, before market as well. And look at this beautiful thing, right? So look at this one. This one I like a lot, right? Because why? And this one is actually my favorite between the two, because I like this action that it's been doing. So this one has been stuck between this range here, and I actually have multiple levels indicating the top. So my initial thought on this one is this is going to be a really good short from this 207 to 209 level for a potential move lower. My biggest thing on this one is that it hasn't closed this gap. It made this gap. And if you go back through previous times on the chart, you'll see that it does like to close these gaps, right? It likes to close the gaps, and normally it closes them before the next earning. Between earnings to earnings, it likes to close gaps, right? So look at this gap here, right? It made this gap. So it made this gap here. And then before the next earnings, it closed that gap, okay? And then it just came back down, etc. Now, This one looks awesome because it's like, okay, now we're stuck in this range. And to me, this looks easy, guys. Why? Because it just makes it easy for you. It's like, it's either going to break down out of this range or it's going to break out of this range. Which way is it going to go? I honestly don't really care. You know, where it is now gives me a really good indication that I may want to come down because it's having a really hard time breaking that level. So at the very least, it'll come back down to this level. You know, and if it manages to break this level, then we can say, hey, man, this thing is going to keep going lower until it closes this gap here, okay? So that's what I'm looking at as far as the downside goes. But now, hey, you know what? What if it doesn't want to do that? What if it has an awesome earnings report like it did last time and it gaps up and just gives you a bigger gap? Awesome. I honestly could care less what this thing wants to do, right? I could care less. And I already have an order in, guys, for a potential play. So as you can see here, I'm expecting it to go a particular way, but obviously I'm only risking a little bit of money because I don't know where it's going to go. But I honestly just put this in because I want to be reminded to keep an eye on this one. So I don't expect that order to actually be filled because I put it significantly in my favor. But let's say this thing does want to move higher, guys, right? And it gaps up and it says, hey, man, I'm going to give you another $10 to the upside. Because the last time it gapped up and now it's stuck between this $10 range, basically. The primary range is a $10 range, and then it gives us some extended ranges after that. So I'm saying, hey, man, if this thing wants to gap up and go up, I'm going with it. At the very least, you can see here that it is a solid mover when it reports earnings. So either way, if it gaps up and it shoots up, I'll go with it. If it gaps up and it shoots down, I'll go with it. At the end of the day, Burlington has proven to be a solid mover, very little wicks as far as it comes to when it reports earnings. So I am definitely going to have this one on my list for Tuesday because I am expecting this to be a mover. When it comes to Burlington, I am expecting at least a $12 move, guys. It moves around $6 per day when it's not in earnings. So I'm looking for it to have at least $12, $12 to $18 at most. And if really strong volume comes in, maybe $24, but that is very, very off chance, very an off chance. I would say you're likely to get anywhere between 10 and 12 as a primary move. And if you do take this trade, like I will, just be sure to keep an eye on the expected move. So between $10 and $12, and if it starts to struggle and you're like, okay, man, this thing moved. Okay, so if it's moving, and then it starts to struggle at a specific area, and you notice, oh man, this is already plus $10 or minus $10 from where it opened, keep an eye on that and say, you know what, maybe I'll take my profits here because that's all it's going to give us. You know what I mean? Whether you made $1, $2, or $3 on the move and not the entire $10, but it's already at its maximum move for the day, just keep that in mind for yourself, guys. So that way you're able to lock in your profits and you don't become stubborn or hold something or get stuck holding the bag, you know, after it blew its load and then it reverses, you know, at the end of the day or something like that. So that's the week ahead, guys, you know, and the weeks and going towards the end of the year, I'm expecting an increase in volatility for sure. So there you go, guys. The order is right here. So you can see here that at 9:17, somebody put in a single order for going into the 13, 14, and 1250 strikes on the VIX. So now when you right click and analyze this, you kind of have to play around with it to kind of determine what kind of strategy is in play here. Because it is a multi-strike level, I would say somebody collected a lot of premium to put this play in. And again, 22,000 contracts, guys, even when it comes to pennies being collected is a lot of money. So I'm willing to bet that somebody put in a lot of money to collect this premium in the off chance that the VIX actually has a massive spike between now and December 18th, because they are going to lose significant amount of value. Initially, they're probably going to spike and actually gain value just because of the increase in volatility. But the off chance is that the VIX has a higher chance of actually rallying more than it has a chance of breaking down to a level of 10 and 8 between now and December. And if somebody put this kind of money at risk betting that it was going to drop to 8, I mean, that is a ballsy move. And I will commend this person if that trade actually works out, if they are actually betting that the VIX is going to the downside. So that's pretty much it for today, guys. I hope you guys enjoyed. If you liked the video, give it a thumbs up. If you didn't, give it a thumbs down. Either way, you're supporting this channel. And go ahead and subscribe if you have not subscribed already. And I will see you guys on the next one.